Hey everyone, this is the Wickwire Group, and I, as everyone probably knows by now, am not only a licensed realtor but also a licensed lender. And last week we discussed interest rates, we discussed inflation the week before that, and now we're going to discuss buying versus renting. Renting, where you're actually basically making someone else's payment, but renting is a great way to save money and put yourself into a position to buy a home. Of course, nothing replaces the joy of home ownership. That's the number one great thing about it, but it is also an investment. Real estate is an appreciating asset, and it's also a limited asset. So you can't make more of it, so it's going to appreciate over time, higher and higher. But a lot of people don't realize there's also tax benefits to owning a home. Part of your payment every month is interest, and that can be written off on your taxes. So that's a great thing. Rates have gone up, but they are still historically very low. Rates as recently as the 80s were up around 20%. So 5 or 6% may not feel that great, having been around 2.5%, 3% recently, but it is still a historically low interest rate. And there are things you can do to help make home buying more affordable. For first-time home buyers out there, there's a lot of programs that require a very low down payment. FHA goes as low as 3.5% down, and VA actually has no down payment, which is great for our veterans out there. But you can also go the other side and try to save for at least a 20% down payment. If you can put 20% down, then your payment is based on a much smaller balance. So of course the payment's going to be lower, but you're also avoiding mortgage insurance. Mortgage insurance can be several $100s a month, depending on the size of the loan. Private mortgage insurance on the conventional side, and mortgage insurance premium on the FHA side. So putting as much down as you can is always best. Also keep in mind that as interest rates fluctuate, they're going up recently, but at some point they'll probably come back down. So there'll always be an opportunity to refinance your loan to a lower interest rate and a lower payment if you get into a loan now and rates drop afterwards. The last thing to keep in mind is as interest rates have gone up, 30-year and 15-year fixed were really the only options out there that people were considering. But now as rates have gone up, new programs are coming back into play. You got the 5/1 and 7/1 ARM, which means your rate is fixed for 5 years or fixed for 7 years, and then it goes into an adjustable. Usually within 5 to 7 years, interest rates, fluctuate back down and give you an opportunity to refinance. So that's something you can do to help lower your payment over time.